Gold is on fire right now. Prices are hitting record highs, and everyone from central banks to billionaire investors are scrambling to get their hands on it. But why? What's really driving the gold rush? And more importantly, should you be buying gold right now? Hi, I'm Seth Moran. I was in finance for the last 20 years, retiring as a managing director last April. And in this video, I'll be going over the 4 biggest reasons why gold is surging, the hidden forces behind it, and whether it's still a good investment or it's time to sell. So grab your shovel and let's start digging. Reason 1, central banks are hoarding gold like never before. So let's start with something huge. Central banks are going all in on gold. In 2024 alone, they bought over 1,045 metric tons of it. That's more than triple the average from just a few years ago. Leading the charge? Well, that'd be the National Bank of Poland, which alone stacked up 90 metric tons of gold last year. But it's not just Poland. Emerging markets everywhere are stockpiling gold, but why? Well, because they don't really want to rely on the US dollar anymore, and they don't want to be subjected to any weaponization of the dollar either. So with global tensions rising, these countries see gold as the ultimate hedge against currency instability. And the more they buy, the higher the price goes. Reason 2, investors are pouring money into gold ETFs. Now, it's not just governments stacking stack on stack of gold, right? Regular investors are piling in too. In 2024, gold investment demand jumped 25%, and gold-backed ETFs saw a massive surge in inflows. Despite the outflows caused by the election that we saw from November to December due to higher interest rates and also the surge in Bitcoin buying. Well, why? Well, because inflation fears and speculation have made gold the go-to safe haven asset. For the last 3 years, gold ETFs were actually losing investors. But not anymore. Money is flooding back in and buying the highs at that. ETFs continue to be super popular as investors see them as an easy way to get in, get exposure quickly. And here's the kicker. Gold has been ripping despite the US dollar continuing to strengthen. And whenever the dollar is strong, gold tends to drop because it becomes more expensive to buy. But not this time. Investors are looking at gold from a completely different lens these days and want exposure to hedge against all the geopolitical bullshit they are seeing on a daily basis. And they're not thinking about it from a dollar cost perspective either. They're just demanding exposure. Looking for a way to play gold through ETFs? Well, check out this chart here. My favorite is GLD right at the top, but here's a bunch more if you're interested. Check them out. Reason 3, the world is a mess and gold loves chaos. Well, let's be real. The world is in turmoil. You have wars, economic slowdowns, trade tensions coupled with tariffs, you name it. And history has shown us that whenever things get messy, gold prices grind higher. So think back to 2008. The financial crisis sent gold prices surging. And in 2020, same story, but with COVID. And now in 2025, with global uncertainty through the roof, gold is once again the go-to asset for anyone looking for stability in unstable times. Don't forget I called this in my 2025 market predictions video as well. Despite the amount of negativity that was out there surrounding gold, it was all really based on market uncertainty. That's why top analysts from bulge brackets like JP Morgan, Merrill Lynch, and Morgan Stanley are all saying gold could still have more room to run in 2025. The question is, how much higher can it go? Reason 4, there's only so much gold left. You want to hear something crazy? We're running out of gold. Like literally. Unless we get Bruce Willis and Ben Affleck back out there to start drilling in asteroids, we've dug up most of the mineable gold on Earth already. The gold around your neck or your wrist could have originally belonged to an Egyptian pharaoh or stolen by a Spanish conquistador, and then melted and smelted and changed hands 1,000 times and was given to you as a graduation present by your grandparents. You just never know. But the point is, there's only a finite amount of gold left in the world. In fact, all the gold already dug up in the world could fit into just 3.5 Olympic-sized swimming pools. That's mental when you think about it. Since most of the easy-to-mine gold has already been melted and smelted, what's left? Well, it's deep underground and even more expensive and harder to extract. That means supply is tightening while demand is exploding. But when you find a gold vein, the turnaround time for finding it to getting it out of the ground, putting it around someone's neck is about 10 years. So it ain't quick. And even though recycling rates have jumped about 11%, it's nowhere near enough to keep up with demand. Less supply plus more demand equals higher prices. It's just simple economics. So should you buy gold right now? Here's the deal. If you're looking for a hedge against inflation, normally a weakening dollar or geopolitical uncertainty, gold is still a solid choice. But if you're expecting gold to double overnight, that's just not how it works. Gold is a long-term play. Smart investors buy it as a part of a diversified portfolio, not as a get-rich-quick scheme. But how about you? My question to you is, are you buying gold right now? Do you think prices will go even higher? Do you disagree with me and think no breather in gold prices will come? Drop a comment below and let's rap about it. And if you want more money-making insights like this, hit that like and subscribe button, ding the bell, and I'll see you in the next one. Until then, remember kindness is the rent we pay on Earth, so do something nice for someone.